Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day. Wipro's executive chairman Rishabh Premji recently said that talent, not market growth, was a challenge tech services companies were staring at. Struggling with high attrition rate, the IT companies are reported to have hired 1.2 lakh freelancers between April 2020 and September 2022 to meet the shortage of talent. With recession looming large in its key markets, Indian IT majors are struggling to put their house in order. But what is the root cause of these troubles? Is it, at the end of the day, an HR management challenge? Let us find out in today's segment.
Wipro recently axed 300 employees after it found that they were also working for its rivals. The decision was announced by the firm's executive chairman Rishabh Premji, a vocal critic of moonlighting. As remote working became the norm due to the COVID-19 pandemic, employees found it easier to take up more than one job at a time without the knowledge of their companies, a practice known as moonlighting. Of late, it has become a concern for the Indian IT industry. The co-founder and former CEO of Infosys, Chris Gopalakrishnan, also joined the debate recently, saying that working for more than one company at the same time would come in the way of building trust. His remarks were aimed particularly at the new generation of techies. Earlier in September, Infosys sent an email to employees titled "No Double Lives." The country's second largest IT services firm said that dual employment was not permitted in line with the employee handbook and code of conduct. However, the email from Infosys also made a distinction that may prove to be important in settling the moonlighting debate in the future. It said that the company's consent was paramount with regard to moonlighting. The letter added that consent may be given subject to terms and conditions and may also be withdrawn at any time. Effectively, this leaves the possibility open that at least some employees could hold two jobs simultaneously without it being considered moonlighting. In fact, companies are reportedly turning to experts and digital tools, which forensic accountants say can easily track moonlighters. Arpinder Singh, Global Markets and India leader, Forensic and Integrity Services, EY, told Business Standard that EY was working with several firms to gauge the extent of moonlighting among their staff. Even as they tackle this problem, there's evidence that the plans for the Great Return, or resuming work from the office, are not progressing smoothly for all IT firms. While IT companies have been at the forefront when it comes to hybrid and flexible work, they have now taken the lead in rolling back remote work plans. IT firms have had to keep up with the changing dynamics of the job market, where, till recently, workers had been quitting their jobs, seeking either higher pay, better benefits, or more control over their lives. While Indian IT firms say that a hybrid workforce is the new normal, client needs have made a return to the office and work sites necessary. Also, a return to the office first is necessary for their hybrid policies to kick in. At Tata Consultancy Services, 20% of its employees are back to office. TCS has said that it will continue to drive the return to office model because having a permanent hybrid work environment will first involve getting back to a normal working environment. That is why TCS recently asked around 80% of its staff to return to the office. Perhaps the industry's frustration with stubborn employees was best reflected when RPG Group chairman Harsh Goenka recently warned IT workers of a mediocre career trajectory if they dug in their heels and worked from home. These challenges couldn't have come at a worse time. The performance of top-tier IT firms in the first quarter of the current financial year shows that they are still far away from getting a grip on managing attrition. In fact, talent retention challenges have eroded both their margins and any gains they may have made thanks to the depreciating rupee. Despite higher pay and other retention policies, attrition continued to zoom. Attrition at Infosys rose to 28.4%. TCS saw a much higher rise in attrition at 19.7%. Attrition at HCL Technologies for the quarter was up at 23.8%. In fact, Wipro was the only company that reported a drop in attrition at 23.3%. the IT industry will be worried that the current talent crisis may delay its efforts to move up the value chain by delinking headcount and revenue streams. So, what is the root cause for these challenges? Is it perhaps a human resources management challenge?
So it certainly is an HR management problem, but in my opinion, it goes beyond the realms of HR. There is a serious demand-supply gap, and because of which the balance of power is in favor of employees and resources. And it is because of that reason we see employees these days, at least in the IT industry, would demand higher remuneration. They would look for moonlighting, for example, these days. First, look at creating a human-centric design when you are thinking about HR management. We are talking about Gen Z resources and align your processes and the way you think to the way Generation Z thinks. Look at hybrid work, look at changing your culture, look at bringing in more agility, look at hiring gig workers. It'll be a bad idea to completely reject moonlighting. Internship and graduate programs, right? Which is something which is pretty normal for a very large IT company. But for a small company, they don't do it. They will have to consider starting an internship or graduate program as well.
As long as there is no potential for a conflict of interest and the employee productivity is not negatively affected, companies should be receptive to employees working into side employees, right? And I think that's one of the reasons why when you have a hard stop, the attrition also increases, right? Currently, there has been either people who are for it or there are people who are completely against it. And I think that's something is not helping the whole cause. From a company's point of view, marketing itself as employee focused and accommodating is a great way to entice top talent.
Recently, freshers who had received job offers from top IT companies took to social media to say that they had not received an offer letter or any communication about the onboarding process even 3 to 5 months after the offer was made. The companies concerned have said that all the offers made will be honored. However, this may point to some lacuna in their HR process, which could damage the trust of future employees. Loyalty, after all, is a two-way street. IT industry leaders have spoken a lot about how employees must build trust. Perhaps equal emphasis is now needed on IT firms responding in kind.
Unlike the IT sector, the pandemic has been really hard on the aviation industry, which is now gradually recovering from turbulence. And for India's largest airline, IndiGo, it's a clear sky. Its revenue has soared over 4 times in the June quarter and the losses have narrowed. But at the same time, other airlines are posing a challenge to its dominance in the sky. Some of them have launched a new segment called Premium Economy to attract flyers. It is a category between the economy and the business class. So did IndiGo miss the premium economy class flight, or does it have other plans? Let us find out.
The domestic aviation sector is set for a smooth ride after the pandemic turbulence. The competition is hotting up while the prices of tickets are cooling down. Air India, under its new parent Tata's, is readying an expansion plan. The carrier has leased 25 Airbus narrow-body aircraft and 5 Boeing wide-body planes and is looking to introduce premium economy class in all the newly leased planes. Premium economy is unique. It has more luxury than the economy segment, but it is also a compromised version of business class. The tickets can cost up to 50% more than economy on some high-demand domestic routes. The premium economy product offers larger seats, better meals, and includes priority boarding and baggage handling. while business class is a step above the premium economy with extended recline comfort, personal storage space, and much larger seats. The economy segment is a leg below the premium economy with 28 to 30-inch seat pitch and lesser recline adjustability. Experts say the premium segment is the most optimum product in India. If we look at the economics of the premium economy in terms of per square meter of area it takes, the returns are almost 33% higher than an economy, said an analyst. Currently, Vistara, a joint venture between Tata and Singapore Airlines, is the only airline in India that offers premium economy class. Globally, major carriers like JetBlue, British Airways, Virgin, Cathay Pacific have some capacity in the premium segment. Some experts say Vistara's premium economy segment is doing much better than expected. Recently, Vistara CEO said the premium economy got a lot of attention in the pandemic as people were cautious about social distancing and seeking comfort. He added that subscription to the premium segment went up 5 to 10%. Now, with Air India joining Vistara to venture into this category, has India's biggest airline and budget carrier IndiGo missed out on the opportunity?
No, not exactly. I think IndiGo has all the best opportunity to look at that premium product or a premium economy product today. Specifically, if you look at the kind of aircraft that they're going to be getting in the A321 Neos and the 321 XLRs, that's really the aircraft which gives you that premium economy benefit. So at this point of time, did you really need that product from an LCC perspective? I don't think so, because if you look at the Indian market, the market that IndiGo really started to focus on when they started off was the people who would travel for the first time, and the people who sort of the middle class, and that was the growing segment that they wanted to focus on. So for that, I think you need to look at the time when IndiGo really started off. At that point of time, reliability, on-time performance, all of these things were what they really based their product on, and the idea was low cost. So you really do not create a differential seating model in order to because that can have an impact on your costs, because your cost has to be higher because you have to maintain two kinds of products. So I think that commonality is what drove IndiGo to achieve what it is today. But yes, if you're talking about the next 10 years growth of IndiGo, that would be sort of coming back and looking at creating these kind of products like premium economy.
IndiGo's strategy of low-cost air travel is completely different from, say, Vistara, which prides itself on providing a memorable flying experience. Vistara has defined its strategy as a function of class and caters mainly to corporate and leisure travelers who see business class as a touch expensive but are averse to economy travel either. On the other hand, IndiGo earned the market leader tag by focusing on affordability and lower income groups. It has been one of the few airlines that has been able to consistently generate profits over the years. With a fleet of 281 aircraft, including 35 A320ceos, 146 A320neos, and a market share of nearly 59%, industry experts are on the same page that IndiGo is already sitting on a world-class product which is embedded deeply in the Indian market. Mark D. Martin, founder and CEO of aviation consultancy Martin Consulting, said it doesn't make sense for IndiGo to go for premium economy or other higher classes. Having said that, whether the airline would get into a higher segment product will depend on what kind of market opportunity IndiGo sees for itself from these products. Experts see a negligible opportunity cost for IndiGo, as it never went for the premium economy segment.
I don't think IndiGo has missed an opportunity, because firstly, Air India is going to introduce this only on certain international segments. What is the nature of that segment is these are long-haul flights or ultra-long-haul flights, which means 7 hours or above. They are to specific destinations where there's sizable business demand. So again, premium economy does not work in all markets. It is very market specific. Your question, has IndiGo missed the bus? One is they're competing in very different segments. If you see IndiGo's international presence, they're focusing on short and medium haul flights, which means 3 to 5 hour flights. Secondly, when IndiGo gets the XLR, which is the extra long range Airbus 320 Neo aircraft, they are already debating how to configure this. And so you may very well see a rollout of a product that may resemble premium economy. It may be a product that's its own category, which is higher than premium economy, lower than business.
Moreover, the premium economy category also depends on the travel time. For most of the short haul travel routes that IndiGo operates, the premium economy segment could be futile. Premium economy is an opportunity for IndiGo worth exploring in the future, especially when extra long range Airbus A320XLR joins its fleet from mid 2024. But it has certainly not fallen behind the curve, as it has established a product that caters to a large segment of Indian flyers.
IndiGo recently added a UAE city as its 100th destination with a new direct daily flight. The budget carrier may certainly not fall behind the curve. Moving on, a slew of global central banks joined the rate hiking bandwagon last week after the US Federal Reserve raised interest rates by 75 basis points. As the global consensus towards aggressive monetary tightening gathers momentum, will the Reserve Bank of India also echo a similar tone this week? Besides, which sectors and stocks look attractive at this point in time as markets deal with rising rates and economic pressures? Here's a report.
A slew of global central banks raised interest rates soon after the US Fed lifted its policy rate in the range of 3 to 3.2% last Wednesday. Bank of England, for instance, raised interest rates by 50 bps to 2.25%, while central banks of Switzerland and Norway too followed suit. The Reserve Bank of India is also expected to join the hawkish herd in the wake of global monetary policy tightening. The three-day Monetary Policy Committee meeting will begin on Wednesday, September 28 and conclude on Friday, September 30. As per a Business Standard poll, 7 out of 12 economists expect the RBI to hike repo rate in the range of 35 to 50 bps. While one of them vouched for a 40 bps hike, the remaining 4 batted for a 50 bps increase. As liquidity absorption continues across the globe, analysts see equity valuations coming under pressure. They suggest investors stick to sectors with high domestic exposure. Jitendra Gohil of Credit Suisse Wealth Management says, banks, healthcare and sectors that could benefit from higher consumer spending, including autos, remain a favorable bet ahead of the festive season. Mitul Shah of Reliance Securities, meanwhile, believes financials, autos and IT sector will remain in focus this week.
So the rise in repo rate coupled with the inflation is likely to impact the market in near term. Based on this expectation, we believe that financial sector would remain under focus during the week, with certainly positive bias. As we all know that rate hike has most of the time led to expansion in NIMs for banking sector or past many occasions. See, in another point, in addition to this, Accenture has reported its fourth quarter result last week, and its commentary was weak in terms of weaker guidance. This would continue impacting Indian IT space also, and we expect pressure on IT measures during this week too. Another interesting area would be automobile sector and consumer sector. Based on channel check during ongoing festival would indicate the sales performance of automobile and consumer durables during the next few days. So these stock prices would remain volatile during the week ahead of auto monthly volume. So therefore, auto, IT, and financial sectors would remain under radar during the week, and this will be the key focus area, with a positive bias on financials and negative bias on IT space.
Amid these developments, the rupee's trajectory and foreign capital flows will dictate the market's trajectory this week. According to technical charts, the 50-pack index can face resistance around 17,800 levels, while buyers may support the index at 17,000. The S&P BSE Sensex, on the other hand, may steer towards 59,500 on the upside, with 57,000 acting as a strong support. That apart, monthly derivatives expiry for September F&O contracts, along with other global cues, will be on investors' radar.
Scores of people linked to Popular Front of India or PFI were taken into custody from various parts of the country during raids conducted by the National Investigation Agency and the Enforcement Directorate on Thursday. The outfit, which has a checkered history of brushes with the law, claims to be representing Muslims and other marginalized communities. Our next report tells more about this outfit.
While justifying his arrest and prolonged detention, the Uttar Pradesh government had told Supreme Court that Kerala journalist Siddique Kappan had deep links with terror funding organizations like Popular Front of India and its student wing, Campus Front of India. The claim was denied by Kappan and his counsel. Popular Front of India, or PFI as it is known in common parlance, is an outfit which has been in the eye of storm since its formation. Created in 2007, PFI describes itself as the organization that fights for the rights of minorities, Dalits, and marginalized communities. The decision to form the organization was made on November 22, 2006 in Kozhikode, Kerala, and it is headquartered in New Delhi. PFI was founded after merging three Islamic organizations in southern India: the National Democratic Front, the Karnataka Forum for Dignity, and the Manida Needhi Pasarai. The organization does not contest elections but carries on social and religious work among Muslims. Another outfit, the Social Democratic Party of India or SDPI, emerged from PFI in 2009. It raises political issues for Muslims, Dalits, and other marginalized communities. PFI provides ground workers to SDPI. PFI has been repeatedly accused of riots, murders, and having links with terrorist organizations in the state. In 2012, then Chief Minister of Kerala, Umman Chandi, told the High Court that PFI is nothing but a resurrection of the banned outfit, Simi. The Chandi government also filed an affidavit saying that PFI workers were involved in 27 murder cases. Most of those killed were from the RSS and CPM. But PFI workers are not the only ones accused of murders. The age-old rivalry between RSS and CPM has seen hundreds from both the sides losing their lives to violent attacks. PFI is the new entrant to this club. In April 22nd, A. Subair, PFI president of Elapuli, was killed outside a mosque. The police said that the killer's vehicle was registered under the name of S. Sanjit, a slain RSS worker. Sanjit was allegedly killed in November 2021, allegedly by the workers of PFI and SDPI. In April 2022, S.K. Srinivasan, another RSS worker, was hacked to death in Palakkad. Abu Bakr Siddique, PFI secretary for Palakkad, was arrested in September on the charge of Srinivasan's murder. Abu Bakr was also arrested in 2020 for inciting violence during the anti-CAA protests.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
On its part, PFI has criticized the use of state machinery and said that central agencies were being used to silence the dissenting voices. That's all for today. For more news and analysis, please log on to businessstandard.com. We'll be back tomorrow with the next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.